There was chatter about it and talk about it, just like there has been before. And I'm aware that consumer prices in Australia did drop quite significantly in the first quarter. But the fact is your economy is still growing. Your jobless rate is 30-month low. So it did catch the market off guard. That's a fact. It's quite busy in the Australian dollar today, being down about 170 bips in the futures market. So, yeah, it did actually catch everybody by surprise.
Not just here in Australia, lots of comments recently from central banks around the globe, the Fed, the Bank of Japan as well. I suppose the other big news in the US has been around those manufacturing PMIs, which do seem to have slightly deviated from those expectations. Has this affected sentiment and, I guess, changed the narrative around growth much?
You know, it may, but, I mean, we have to keep in mind that's just one number. PMI is generally a backward-looking number, not forward-looking. I'll admit that the data has been very mixed overall the past month, and it would be nice to see that momentum change. I still think it will, and I still don't think it's going to stop the Fed from raising rates. I mean, will they raise them in June? I'm starting to doubt it, but I do still believe there's room for 2 rate hikes this year. Mainly because I do think the data will turn the corner. I don't think we'll see that 3% global GDP growth that I was hoping for, but surely above 2.5%.
Yeah, I mean, sentiment at the moment doesn't really seem to be positive or negative. Conviction levels, though, they seem to be a bit non-existent at the moment. What's everyone waiting for?
It's a great question. I mean, what I come to realize is that, like, the S&P 500 is basically at the same level it was when earnings season started in April 11th of this year, and we made that magnificent rally up to 2100 based on really nothing except for perception that earnings season is going to be better than expected, the multiple is going to be better than expected, and the market was correct. I mean, they were penciling in like $117 for the S&P 500, and now it seems like 121, 122. That gets us into a multiple like 16.5 times, which isn't expensive, but it's not cheap either. So I think people are just waiting for that next catalyst. They need a string of data to suggest the market deserves to go higher.
Wanted to ask you about the dollar because we're still sort of seeing this consolidation, I suppose, since mid-April. It's resumed its decline now. A lot of momentum against the US dollar at the moment, isn't there? We've been talking to you recently. You're suggesting that the dollar is actually satisfied, though 2 of those 3 required conditions for bottoming.
Yeah, and that's what I spoke about last week. I mean, a lot of short cover or a lot of shorts out in the market, get people to cover. And the valuation problem that it clearly has. But the thing that did not happen yet is we haven't seen the growth in the U.S. to get the momentum to switch. And, you know, as we were talking all last year about the dollar was rallying, it had a valuation problem, but it continued to rally and rally. I still think the dollar has bottomed out. But that could take a while for that to really turn the corner and bounce back. But, yeah, I do think it has a valuation problem. But right now, the carry trade is what's holding everything together.
I suppose that the weaker US dollar, it's very much continuing to underpin a lot of those key commodities, especially gold. And gold has really been a key focus at the moment. Supply and demand, that finally seems to actually matter now in the gold market.
Yeah, gold's been a fascinating trade, and the market seemed to be so bearish on it all back in January of this year and just zoomed right up. One thing we have to remember is that the investor has come back into the market as quickly as they fled the market last year. They came back in this year. And I think the only real difference is the physical market is a little bit tighter than it was before, so it's allowing that market to really ramp up. Short term, I do believe gold will fall back a little bit. I think 1250 is probably a nice spot for it. Medium to long term, though, I do believe that the trajectory is higher.
What about for oil prices? Because we've seen these oil prices, I guess, hovering around their 2016 highs. I suppose Venezuela is still remaining at a supply risk there. Do you think the market's run a little bit too hard, too fast, and we could be in for a sort of period of weakness again in those oil prices?
Yes, absolutely. I do think the risk of it going higher right now is a lot less than the risk of it going lower. That doesn't mean I'm right about it. I just believe that markets continue to overstretch one way or the other. And just like oil didn't deserve to be below $30 a barrel, it remained there for quite some time. And so right now, the market is embracing the fact that we are getting tighter than we were before. But I still think the larger story is that we do have oversupply. We're definitely not anywhere close to being balanced, and I would suggest oil prices closer to $35 a barrel before we consolidate.